Welcome back to the Innovation Engine podcast. I'm your host and Three Pillars financial service industry lead, Rob Murray. I'm thrilled to be joined today by my colleagues Albert Thibault and Jennifer Moon.
Hello.
Both our guests are an instrumental part of financial services industry team, which helps banking, credit unions, payment platforms, and fintech digitally transform by providing our clients with the expertise and tools to outpace the competition. Here at the Innovation Engine, we feel that we must learn from the past and apply it to the future. So to use a famous quote from Soren Kierkegaard, life can only be understood looking backward, but it must be lived going forward. So we're going to take a bit of his guidance on this episode. So we'll be looking in the rearview mirror at some of the biggest trends that shaped innovation in financial services in 2023. And we'll also be looking ahead at what's in store for 2024 when it comes to the intersection of digital products and all things innovation. So without further ado, Albert, Jen, welcome to the podcast.
Woo, thanks for having us, Rob.
Delighted to be here, Rob.
Excellent. So let's kick things off today talking about the year that was. Since this is my first time as the sole host of the show, I'd like to try something a little bit different. I want each of us to take a minute, write down 3 trends that we saw shaping up in FinServ in the last year, share it, and then let's see where and how much we overlap in our suggestions. Is everybody ready?
Ready?
Wasn't prepared for a test, Rob, but I'm ready.
So I'll give us a few seconds. I need to write it myself. Jen, if you would go first, let me know when you're ready.
All right. I don't write a lot, so it's taking me a second longer than I thought. All right. So I listed out my 3. I'm going to show them here. I don't know if you guys can read that or not.
Yes, we can.
And they all kind of link together. And I'll start with data, right? Actually, I wish I had written that last. I'm going to start with cashless. This is cashless. And I put it in quotes, right? Because I use that quotation, cashless, to represent a lot of things. But I didn't want to use the word digital because I feel like we've been talking about digitization for forever now. And so cashless really is the manifestation of that, right? And I leave my house without my wallet, right? I don't actually even remember. And it's funny, I say wallet as if I'm carrying cash. I don't actually even remember the last time I paid cash for something, right? And so what I meant by cash was actually credit card, which is my new currency of cash. And even beyond that, now I can do it with my watch, do it with my phone. And so I think seeing that, and this links to that next one, again, skip data, go down to personalization of like meeting individuals and digital native customers where they are, right? How are financial services customers, clients, infrastructure evolving to that? And then the downstream effect of that is the amount of data that comes with it, right? When I paid with a $20 bill back in the day, that was that. And I walked home and yes, there was a receipt, but it wasn't necessarily tied to me. Now, my banks know that I prefer to buy my groceries every Sunday at 10:30 a.m., right? And if they really want to track it, they can probably figure out what I was doing right before 10:30 a.m., i.e. getting a coffee, also with my phone, And so I think just this ecosystem of the user really being a walking set of data, I think I just saw that even more prevalent in 2023.
Makes sense. Thank you for sharing. Albert?
Well, my writing isn't as nice as maybe you can see that. Probably you can't. So a lot of this is tied into some of the themes that Jennifer was raising. The first is customer experience, and a couple of things about that. Jennifer talked about how customer experience is being driven by data and personalization. And what I've been noticing is that the customer experience between very, very large banks and mid-sized banks is tending to look very similar. And that the difference between very large banks and mid-sized banks and very small financial institutions like a neighborhood credit union, for example, is not as great as you would think. And so customer experience, and because your banking app in the way that you interact with your financial institution via a laptop, for example, is becoming very similar. That space is once again ripe for real innovation. And I think that when we move from 23 into 24, I'm going to bring up this topic again as a place where financial service institutions can once again begin to differentiate themselves, having met the basic building blocks of a good CX. I think we all know approximately what that looks like and how design thinking and putting the user first can transform the way that you bank. And now it's really about using data to drive innovation. The second trend is really all about the war for talent. And at the beginning of the year, we saw a lot of the tech companies taking another look at whether or not they were appropriately staffed. We saw a lot of turnovers, and I think not turnovers, layoffs in the tech space. And I think banking really benefited from that by being able to bring in a lot of people. The problem with that is that all of those very, very innovative people want to work on the latest and greatest thing, on the cutting edge. And if they're not working on the latest and greatest thing, then you're running into a turnover risk. And that brings me to the third point, which is technical debt, and how technical debt is beginning to overwhelm innovation budgets. And you're so busy worried about the technology that you installed 10, 15 years ago, and whether or not you can make that work for digital natives in a digital banking era, that you're unable to do the CX that really drives differentiation and other types of innovation, which really drive innovation. So banks are increasingly, financial institutions more generally are increasingly worried about how they're going to manage all of the technical debt that they've incurred.
No, it makes
So
a
that's
lot of
1,
sense.
2, 3,
Albert,
Rob.
yeah, one of the things that you both hit on, and it kind of jumps out at me, is the user experience, specifically the digital user experience for consumers and clients in let's say the commercial space, but really digital in financial services, especially for your large financial institutions, are just the digitization of processes that existed, right? And I've read a few articles as of late that talk about it really to get to real optimized user experience is really almost to break all that apart and really to understand what it is that your customers and clients are trying to do and build it from there. But to your point, Albert, a good bit of that is the technical debt that exists is restricting the ability to do that.
Yeah, a lot of people, I think, have started with the premise that digital banking was taking a traditional checkbook and making that digital. So giving yourself a phone that you can go and you can look and you can check your bank account and you can move money around and all that kind of good stuff. But the phone, the digital experience should allow you to do far, far more, particularly as you inject AI and big data into personalized solutions for customers. So I think we're at a point now where we've kind of figured out the basics of banking. And now we need to drive differentiation, not by comparing yourself to people who don't have a digital checkbook, but to everybody now has a digital checkbook. So how do you make your digital checkbook superior, easier, more fun, whatever, than everybody else's?
No, agreed. And not to take away from all the great work that's been done. Like if you think about mobile banking and its progress over the last, 10, 15 years, it truly is amazing work. But now I think we're on the cusp of what's that next level of innovation, right?
I recently signed up for an investment app. I won't name it, but the way that they're going is to simplify the experience. So instead of 10,000 choices offered by the big bank, they're giving me 3.
Right.
And I'm not getting all the choices that I might have wanted, but it sure is a lot easier. It's like choosing between 3 cereals and choosing between a whole aisle of cereals. How much fiber do you want? How much sugar do you want?
Right.
How much?
Well, it's the difference between going to Trader Joe's, right, versus Giant or whatever
Right.
local big chain.
Exactly. And I have found this app really refreshing I was able to set it up in about 30 seconds flat, make some really simple decisions, and give it, of course, some of my money. And here I am. I'm making money all of a sudden while I ride the stock market up.
Yeah. No, and I
And
think it what I love about that on a human and personal level is it's opening its doors, right? We're widening our audience and the pool of people who get to play now because we've simplified it, right? You don't have to feel like I'm not prepared for that, or I don't have enough education or enough background for that. Like there is an element of even I can be part of this, right?
right, the
Love that.
democratization of
Absolutely. I'm all, as a
banking.
human, I'm for it.
Now we're getting way off topic, but how you
No, this
apply
is
that
great though.
simplification to the unbanked, for example, people who use paycheck services or check cashing services and so
Right.
on will be very interesting to watch over the next several years. But if you don't have the big data and the personalization behind it, the as you grow more sophisticated, you can rapidly outgrow your investment app.
Yep.
And so even now, I've been using this app for 3 months, and even now I'm kind of going, so is this it? Is this all I can do? And so it's kind of like, should I pull my money out and find a more sophisticated app?
That's the next phase of good products, right? Making sure you can
Exactly right.
retain the customers once you
Right, but then you get more and more and more and more and complex, and then you're getting into this situation where you're comparing the Tesla's flat screen with your old analog buttons.
Yeah. And then where did your competitive advantage go, right?
Right.
But you're right. We're diving into
There we
a whole. We could dive into lots
That's
of
right.
tangents.
Yeah,
CX
no, this is great
is
conversation. And so I'll share mine. I don't know if you could see my card here, but the three things that I hit on was economic trends, the obvious interest in AI, and then lastly, awareness around technical debt. And so one of the things that was really focused on as an industry lead, really coming into 2023, was just the economic headwinds that caused a rather significant pause in investment in technology. And obviously, it was driven by the uncertainty. And it just really caused CFOs to kind of pull back investment. And as the year progressed, one of the things that seemed noticeable to me is that this angst that existed in the beginning of the year started to slowly slip away. I'm not going to say it went away all the way away, but there was interest that obviously they cut a little bit too close to the bone. And the initiatives that they were looking to cut were kind of necessary initiatives in order to either meet customer need or expectations, or keep up with the Joneses as it relates to their competition. The other
But
thing was
remember, we
obvious
started the
AI.
year with a couple of.
Sorry, Albert, go ahead.
Sorry, we started the year with a couple of bank failures.
Right.
That
Remember?
was this year.
That was this year.
Albert. That was this year.
So when you talk about economic headwinds in banking,
None of us said regional banks. None of us talked about regional banks as the trend of 2023.
I was
so
part
there
of
was
another
definite economic headwinds.
I was part of another Innovation Engine podcast with Scott, and one of the things that we had talked about was specifically the bank failures in the early part of the year. And he asked me a question around the economy, and this kind of layers into what we're talking about here. Is what word comes to mind is resilient, and the systems. What I thought was interesting to me, and although there were bank failures, they were contained, right? And so what it showed to me, at least that to a certain extent, is the systems that have been implemented and put in place to reduce the risk of bank failures really tended to work. And so that was at least, I always tend to look at the world in a half a full glass, or a glass half full. Excuse me.
Your glass is just always full, Rob.
Yeah, my glass is always full. That was encouraging to me that the system worked. The other piece that just jumped out at me, and you can't, and we'll talk about this in a moment as well, is just the obvious interest in AI, right? I think leaders, technologists were just fascinated by the endless opportunities presented by AI and things like machine learning and what have you. And then lastly, And I had this on my list too, is just awareness, a renewed awareness around technical debt, and really the impact, and it's in folks' ability to innovate, and really keep up, as I mentioned, with customer experience expectations as well as their competitors. And so those are the things that really jumped out at me. There are plenty. We could spend the whole episode just talking about those, but certainly a few that jumped out. So great. So a bit more recently, in October, the three of us were out in Las Vegas, Money 2020. I'd love to know what each of your big takeaways were, and then of course I'll share mine. Albert, if you'd like to start.
Well, the big takeaway for me at Money 2020 was the focus on customer experience and how relevant it remains, and how, having reached the plateau I talked about earlier, that there is a deep need to keep investing in CX in order to drive differentiation, and not just keeping up with the Joneses or digitizing paper processes, but how do you drive new experiences and delightful experiences that will convince me to leave a bank and move to a different bank? Because once you're in a bank and you're using it for 3 or 4 different products, shifting, you become quite sticky, and you're willing to put up with a lot of friction, because the cost of change gets higher and higher as you engage with more and more products. So that was one thing that really struck me, was how many people were talking about customer experience and how many people were planning to invest in it in 2024. 2024 is going to be a good year to be a top flight UX person in banking, I think.
Could be. Jen, how about yourself?
So other than the obvious of the house always wins, my biggest takeaway from Money 2020 in Vegas was just continued focus on security and trust, right? So yes, we as users, we as customers constantly say things we want, but things better. We want things faster. We want things cheaper. But hold on a minute, not at the expense of our security and our trust, right? And once you fracture that trust, it's very hard to rebuild, if ever, right? That's a customer that you'll churn in a trade and never get back. And so being able to balance all these things that we're talking about, absolutely having the best innovative customer experience without fracturing that trust, I think is huge, right? And organizations certainly shouldn't use security as an excuse. Those are Jen's words, not words that I necessarily heard on any of the stages. But don't use it as an excuse, but at the same time, it is very real and it is very important to keep at the forefront of all your initiatives.
Nope, great. Makes sense. And one of my big takeaways coming out of Money 2020 is there was a session titled "Commercial Banking Treasury: What We Can Learn from the Consumer Experience," and it kind of reinforces some of the talk track around user experience that we've been discussing. But one of the data points that they shared is that 39% of the workforce is Gen Z. And then you layer on that older generations have an expectation of a user experience, not only on how they use their products and services provided by, say, a bank or your user app, but their employee experiences, right? And that's going to begin to certainly impact your employee satisfaction. That what can we learn from these consumer experiences, pull them into the commercial side, into treasury and those types of things, both from their client standpoint, right? And how do I do my day-to-day job? But also from an employee standpoint, how do we enable employees to have the right data at the right time, information that's easily acceptable, so that I can provide consistent help to my client base. So I thought that was really interesting. Again, reinforcing the need for improved not only consumer and client experiences, but also employee experience as well.
Yeah.
And then the other piece
That's an
was
interesting point.
a good bit about open banking, software as a service as well.
Yeah.
There was just, as we evolve and some of the guidance that have been recently provided on how large financial institutions should accommodate the open banking initiatives I thought was fascinating as well. Albert, did I interrupt? Did I talk over you? Was there something you would like to add?
Nothing that I can. We're good.
Yeah, perfect. All right, so let's shift and shift to 2024, and just take a few minutes and come up with 2 or 3 for the sake of time trends that we see being important for 2024 in financial services, and compare and contrast and discuss. I would expect that they would likely be somewhat redundant on some of the things that we've talked. At least some of my talking points are, and I'll start. The first thing, obviously, is what I see coming for 2024 is, as I mentioned, not only client or customer experiences, but employee facing experiences as well. I had a recent conversation with Gartner and one of the analysts there, and as we were talking about the improving, what I would call a somewhat, I think employee experiences have been somewhat ignored over the years. And as you take a step back and look at those experiences, a couple areas where if we improve those experiences and enabled our employees, especially client facing or customer facing employees, the tools and the technology and the experiences that enabled and provide additional capabilities for their customers, and then also impact the capacity for the organization itself, right? If we make them more efficient, we're able to provide our clients not only with more options and opportunities to satisfy customer needs, but we also provide additional capacity for the business where the employee now can take on more, kind of more clients. The example that was given to me was very specific to a financial advisor that based upon the technology that they have today, they may only be able to manage, 20 clients. But if we enable them within certain, their range of clients may be anywhere from $1 million an investment to a $5 million of investments. But as an advisor, I'm going to focus to my clients with 5 million. Because that's kind of how I would prioritize things. But if we provide the technology to enable them, they may be able to further help the folks with just $1 million in investments, and try to bring them kind of upstream, but also take on more clients, and benefiting both clients as well as the employee. So I thought that was kind of fascinating, in specific around the employee experience. AI, I think in 2024, you'll see a maturation and an evolution of the understanding, and really begin to get a realistic application of AI capabilities, and both in short and really redefine short and long-term expectations, right? There's a lot of unknowns. There's a lot of things that we don't understand yet about AI. It's not the end all cure all, so be careful of the shiny thingy. But I think that's when we'll mature as we learn more around AI. And then lastly, data engineering, analytics, and then ultimately monetization of that data. I think the vast amount of these organizations that we work with have vast amount of data, right? And it's important to organize it in a way that's usable, and not only for internal purposes, on helping drive business cases and decision making and those types of things. But there's many of these organizations that can monetize the data, sharing the data in a way that's valuable in clients, obviously being respectful of privacy and those types of things. But things like benchmarking, which is just such a need for organizations to understand where they are relative to their peers, their competition, and what have you. I think is really fascinating, and some things we'll see in 2024. Jen, you want to go?
Yeah, absolutely. And I had on my list also generative AI, right? So I won't harp on that. I think what I'll do instead is take that, and something new popped in my mind, which is great, Rob, right? Just listening to you speak and your expertise, especially just, you've been there and you've sat in those chairs. But I think, in the post-COVID world, with increasing globalization, increasing amounts of data, and now generative AI, and people wanting to be ahead and on the forefront of things and being proactive versus reactive, just also being sensitive to what that really means, right? Because the data, yes, you want to use data in a ethical manner. And then when we add globalization on top of it, not all countries have the same rules for how you can use data and what you can use data for, right? We think of especially of the EU and GDPR, right, which is very different than how we would handle anything here stateside. And so I think adding that layer, and then going back to your point, Albert, of from before, of operationally, we already have very complex systems. So how do we do this in a nimble manner so that we can make progress? We can actually do stuff rather than constantly hit internal blockers. And so with that, my next trend is really partnerships, right? I think there's no question now of buy or build. There are clear roads where you will buy something versus go and build it yourself. And so what hopefully clients and organizations are looking for are partners who are actually good stewards on that path of actually helping them determine what to buy versus build as well, right? Because it's easy as a vendor to be like, we'll build everything for you, right? But I think there's a time and place where, as a good partner, we'll actually say, no, you should go buy that, and we can help you with that in your overall strategy and roadmap. But don't build it yourself, right? It's not the right answer long term.
Yeah.
Great.
Is it my turn?
It is your turn, Albert.
So, yeah.
So I'm going to be a little bit more, how do I put it, down to earth. And the trends that I want to talk about are sort of ripped from recent conversations that I've been having with my clients, which are around intelligent process automation and regulatory technology. We opened the conversation today talking about bank failures at the start of the year. And yes, we did pull through with relatively minimal damage from the consumer's point of view, but from the bank's point of view, they were loaded on with a lot more regulations to manage. And intelligent process automation lends itself really well to being able to produce the reports and the outcomes that regulatory authorities are seeking without having to add a tremendous amount of overhead. And as those regulations become more complex, and you need to produce more reports for the regulatory authority, then building the technology that will enable you to do that speedily and efficiently will be absolutely critical. And as I say, this is a topic ripped from the headline, so to speak. I had this conversation, in fact, earlier today with one of my clients about how to use process automation and data together. Maybe may sprinkle in a little AI if they can, in order to deliver the reports that the regulatory authorities are seeking without spending enormous amounts of employee time. So I think regulatory technology, reg tech, is going to be a source of pain for banking and financial services and institutions, and one where there's a lot of catch-up work to do.
Love it. Absolutely agree. So with kind of the next question or next thing, the next topic I'd love to talk about is to think about, it's hard to think about all these different trends within 2024 without talking about AI, right? It is everywhere. It's been littered through our conversation today. How would you think financial services companies should be thinking about how they deploy AI in their organizations? And maybe I'll start. I have a few thoughts on it, and then we'll just turn it quickly over to Albert and Jen. One, I just and I layered this in some of our earlier commentary, but I just be careful of the shiny thingy, right? Understand that it's new technology. It needs to be proven. Make sure that it meets the the use case or the business objective that you're looking to address. And so certainly I would suggest things like proof of concepts or pilots to test your hypothesis, and make sure that the solution is fitting the problem that you're looking to solve. So Albert, any thoughts on AI?
I would tend to agree that a lot of the people I talk to have AI and are looking for a problem instead of going the other way around. I'm old enough to remember when telephone apps on your phone were a brand new thing, and everybody had to have an app, and it had to be a native app, and they had to have one for the iPhone and one for the Android and one for the third thing and one for the fourth thing. And now, they're all using a hybrid app that is very simple to maintain on a phone. And I would be careful to start with the business problem that you're trying to solve and see if AI fits, rather than everybody is using AI, therefore I have to test AI somewhere in my business. Instead, start with the problem and then see if AI is the fit.
Makes sense. Jen, any additional thoughts?
Yeah, I think my only thing I would add to that, because you guys both make great points, is focus on your data first. I know it doesn't sound as sexy as saying, let's get to AI. But if you don't have the data, the insights are going to be lacking, right? Because it's driven off that underlying data. And so if you today cannot, one, tell me where your data is coming from, or two, access that information, you're going to fail before you even get started. And so really start at the foundation there is what I would say.
So invest in master data management.
If that tickles you, if that's something
that tickles me. That's a nice phrase.
Great insights, everybody. Thank you, Albert, Jen. Really robust conversation. It seems like we could have spent another hour certainly talking about these great topics. I hope in the new year we'll have an opportunity to meet again and dive a little bit deeper into these topics and more.
Yeah,
this was
glad
great.
to be
Thanks
here,
for
Rob.
having us.
Absolutely.